Ben Emons is a senior portfolio manager and head of fixed income at NewEdge Wealth. Ben, great to have you with us. Thanks for coming in. So yen carry trade, that's what's fueling AI here?
I think it's part of the risk taking. No, it's a traditional trade. People borrow in yen, take that money and go out and take risk. And so when you go back in say 20, 30 years ago with LTCM, that was one of those key trades that was unwound and became a revelation of, yeah, Japan will stay at zero and stays at zero. Even today, as Sarah was trying to ask him about what you do next, still staying at zero or negative. So that is that cheap money that's there, even though that elsewhere money's got a lot more expensive, so if you call it that way. So it feels risk-taking. I think this yen carry trade, being now larger and larger, is something we need to watch.
It feels like then, as long as the yen remains weak, this carry trade could in fact continue. And so what could UEDA do to stem this weakness? I mean, intervention historically does not work, at least for sustained periods of time, maybe just temporarily. So, what would need to happen for this trade to end?
Yeah, the line in the sand is the difficult one. Traders look at 145 to 150 to the dollar. There was some statements out from officials in Japan that were monitoring it. UEDA on the panel says too, we're carefully monitoring it. But that verbal intervention, that doesn't do much. So it does come down to two things, I think. One, Japan does succeed and gets its inflation to 2%, and the Bank of Japan can start unwinding that YCC, yield curve control. Mm-hmm. Or the other turn is that the Federal Reserve does top out with rates and reverses. That latter, I think, is not yet happening, right? Powell was pretty clear on the panel, we have more to go, and the market starts to price that in again. So the yen is sitting here weak until we're getting another sort of verbal or actual intervention, right. And that's a lot of tension.
So, to me, when I hear this, I think of it in a couple ways. One is that maybe this AI trade will last even longer, as long as the yen is weak. And yet you say that there will be a rotation out of U.S. tech into European or Asian tech. What causes that rotation when you can borrow yen so cheaply and remain in this AI trade, which seems to have momentum?
Yeah, fair point in the sense that, yes, you could continue with this yen-U.S. trade, so to speak. But if you then look at euro-yen, that's even more out of control. That's even more moving up. And that's really because the ECB is even more of a trajectory to tighten. So if you think of it from a currency perspective that way, and then you start looking at European tech, and that's a bit different sort of sector than we have in the US, but it's an interesting one because there's companies like back home where I'm from, the Netherlands, where you have a company that dominates the supply chain in tech. ASML is the company that generates machines that allow you to build chips. And so there are companies, I think about 32, 35 forward multiple, but it's actually trading cheaper than NVIDIA and others, and it's actually lagged on the year. So it's an interesting idea, I think, in terms of euro-yen versus this euro-tech.
So let me ask you something. I think I'm about to learn something. The Nikkei is up a lot this year, up 27 plus, but adjusted for currency up, 15, 16 maybe. Isn't that a lot of money going into the Nikkei and going into, do most of those, do they buy them in dollars, they buy them in euros? You first have to buy it in yen and then keep it in yen or convert it to something else. Does that counterbalance what you're saying?
Maybe to an extent, Karen, but I think that this traditional idea of yen hedging, as in, I used to do this in portfolios, buying Japanese T-bills, hedging back to dollars, or in this case, you're saying you're buying Japanese stocks, but you hedge it back to dollars because you don't want the currency risk. Probably done a lot by fund managers who wanted to allocate to Japanese stocks. I think the weakness of the yen is really driven by this, what we saw play out in the panel today. They stick with this policy. They want to get to this 2% inflation. They're not giving up on that goal. So it's going to drive the yen even weaker, right? Even though, as you're saying, yes, there's money coming into Japan, which should lead to yen buying.